What struck me about this is there's all these, the whole world is in a mess financially and everybody trying to dig themselves out of a hole. And here they are, these poor emerging markets. India, for example, the biggest recipient of foreign aid from the UK, a protected budget. And here we are, and perhaps I'm the only person in the room wondering, is it moral to take money out of countries like that?
I agree. On the short term, it looks like that, and certainly that's the way that a lot of these governments operate. But if you look at the broader picture, the hugely important thing of these is not so much the government's short-term desire for money, but actually getting the population out of poverty. And what we've seen, study after study, and really the experience of the last 20 years, is that what gets people out of poverty in developing countries is development, is investment, which generates jobs. Because the big difference out there is shifting from a subsistence agriculture economy to actually having reliable, well-paid work and employment. And what that needs is investment. It needs the money that the City of London, via places like Jersey, can provide. And we've seen, over the last 15, 20 years, 500 million people taken out of poverty in developing countries, most of them in China and India. But
when I said at the outset, what was it, in India, $126,000 millionaires, liquid assets, it's people's eyes might they sort of think, well, look, you know, people in this room, they earn their money off the wealth of individuals. Does it work when you're taking money out of a country? Because they might not be investing it here, but they might be using this as a route to invest it somewhere else, not back in their own country.
Part of them are using it as a route to invest back in their own country. A lot of it because there's severe investment restrictions out in these countries. There aren't reliable financial intermediaries. There isn't a reliable financial system. And also, to some extent, not necessarily India, but some of these countries, there aren't reliable court systems, or people don't trust the court systems. There's too much political interference, corruption in some of them, or simply, I mean, in India, it's often said that the court system is just too slow to be useful. So people are worried about investing within their own countries directly because they're worried that they won't be able to protect their wealth or get their hands on it if they need it. Whereas putting it through an intermediary like Jersey, that's got the reliable court systems, that's got the well-established financial services and the trustworthy professionals to manage it all, is a way of bringing it back into the country. And
well, Senator Philip Ozouf, let's talk about that, because what Jersey has been known for is its stability, the fact that everybody has known what the tax regime is. But everywhere has had difficulties. What is the situation in Jersey? Because you have a tax review. What is likely to change and what definitely won't change?
Well, I think probably the first thing to say is that Jersey's almost had a good crisis. We've, I think, seen far less of a difficulty than some other nations in the world has. We've got strong public finances. We've got no debt. Last year, actually, we ran a surplus in the government finances. But we're looking forward in the next few years, and we are seeing that there is a domestic appetite for increased services in healthcare and education. And as Treasury Minister, I have to have a conversation with the island community about how we're going to pay for those services.
Because you have a forecast deficit.
A forecast deficit, pretty modest in terms of the international comparisons, I'm pleased to say, but nevertheless a deficit of which I am attempting to fill by cutting government expenditure, by boosting domestic tax, and also to growing the economy, as most finance ministers want to do. You grow yourself out of a deficit.
Now, I've been a reporter in the Channel Islands, and I know the rows about, look, it's, you know, from local people about the demand, look, these people come over here with all their money and they just benefit from Jersey and we don't see the benefit from them. What difference might it make, because presumably you don't know at the outset, what difference might it make to those people who are coming in from the outside and investing via Jersey?
Well, in short, none. We are looking at all our tax systems. We're looking at all our tax arrangements, including we're consulting on potential alternatives to our business tax. But that is primarily almost a domestic issue. When we introduced a new tax regime in Jersey, corporate tax regime 2 or 3 years ago, we lost some tax from companies that are having activities in Jersey, domestic companies in the domestic market. And we're certainly looking to see whether or not we can change the taxation system. As far as the outside users of Jersey are concerned, we're committed to continuing offering tax neutrality, and I'm confident that we're going to find a way that is compliant and accepted and recognised by the global community in any options that we...
Richard Cookson, I was struck listening to you. were so many cautions about China. I began to wonder, you know, I thought that it was the great white hope that, you know, but to listen to you, I wondered why people were looking at China at all.
Because it's been growing very, very fast. And because, I mean, I don't disagree with all of those extrapolations into the future. It's simply that, I mean, one reason for caution is that, as I said, that the very thing that makes you more hopeful about China, which is that it's a transition to a more market-oriented economy, is also the thing that makes you cautious in the short term, because it will likely produce a lot more instability.
Okay, but because one of your graphs that you were showing, and I think it was spreads over US Treasuries, there was a blip, which, and when the whole sweep of the graph, you could have done your moving average and it would look wonderful and made
Fantastic,
a case.
yeah.
But there was a blip in 08, 09, where presumably it was a flight to quality. And that must be one of the concerns, that we don't know about what is ahead. And in terms of safety, suddenly the US, for its 10% of, you know, its own problems, it's where people head.
Yes, and that's part of what we're seeing at the moment is just that flight to quality. So you're seeing yields on government bonds, core government bond markets, so Germany and the US, fall to historically extraordinarily low levels. Bund yields are their lowest in 200 years, so far as we can gather. So you're right. What happens in periods of great uncertainty and market turmoil is that the spreads of emerging market debt tend to rise, whatever the long-term prospects, and stock markets in the emerging world are not immune to what's going on elsewhere.
Okay, why shouldn't people be looking at commodities rather than China?
For the simple reason that when you invest in commodities, it's very difficult to value them. So you can go and buy a lump of coal or a lump of copper or whatever it is, but your returns on that are going to be restricted to how much the price of those goes up, A, and B, of course, it's quite difficult to store commodities. So you can go and buy commodity companies, in which case things are rather easier. But just straightforward buying commodities, you can go to an index, but actually it's a rather difficult thing to do.
Geoff Cook, whether we're talking about money coming this way or going that way, you're obviously keen to get Jersey involved in that transaction chain. And what struck me was with Alan Binnington's talk about people talking about BVI as if it is a product. And I wonder, for somebody sitting in China or India, what they know about Jersey and why, you know, why they should come here.
Well, usually the conversation, certainly on our early trips to China and India, ran along the lines of, I'm from Jersey, and then people would immediately correct, say, do you mean New Jersey? So you do have that familiarization issue to overcome. But we've been actually working in the Middle East for a decade now. We're actually quite well known throughout the GCC countries. We've been in Hong Kong for many years in terms of our firms have been active there. We've had an office now for about 18 months. So I think the awareness of Jersey is building quite significantly. And I think an evidence of that was that very recently we had a visit by the Chinese ambassador from the UK to Jersey, which I think was a recognition of the fact that we're actually finally getting onto the radar of officialdom
Why was he coming?
Pardon?
Why was he coming? Not for his own personal...
Oh, it was a lady, it was Madame Fu, but she came because they're interested in globalisation, internationalisation. As they go into Africa, as they come out of China and invest in other parts of the world, they're looking for partner jurisdictions. And they have some concerns about their concentration with jurisdictions like the BVI of having too much of their trade going through single jurisdictions. So they're looking for diversification as well, just as we are.
So she was specifically coming to Jersey with a view to getting Chinese money invested via Jersey?
Yes, she came to have a serious look at us. She brought some people from the government, from the trade section, people with a regulatory background, and effectively ran the slide rule over Jersey. And I think came away with a very good impression. She's now Vice Foreign Minister, has been recalled to China, is now Vice Foreign Minister for the PRC. So we are building our connections and our networks and our awareness with these markets.
Okay, and on that, Philip, Ozouf, that 20% of bank deposits coming from emerging markets, I think it was, is that what's the... Do you sort of do projections where you think, look, this is what we'd really like?
Well, certainly we're very interested and committed to developing Jersey's presence in developing markets. And I, last week, was in Hong Kong and Shanghai. In fact, Jersey, just to back up the point that Geoff was making, Jersey was invited, I and the regulator was invited to a very important financial conference in Shanghai discussing the response for governments around the world for the crisis, etc. So we're on the radar in a way perhaps that other offshore centres are not. But certainly we see the growing world, the global tectonic plates of economic power are shifting. We see the growth of China, we see the growth of the BRICS, and certainly we think that we have something to offer those jurisdictions. We certainly can be helpful in their economic growth.
So they got it, did they? They didn't just think, OK, Jersey is an example of why we should go to the BVI.
I think that Jersey's standing in terms of its standards of regulations, its substance, its real presence, its political stability, and the quality of the financial services that is offered in Jersey is certainly our selling point and is something that we need to raise awareness, but it's working. OK,
and Alan, so for people sitting in this room, sitting in London, thinking, what's the advantage of getting Jersey in the chain, just in sort of bald terms?
Well, I think we're very much a conduit for the UK, certainly in terms of financing. I think the other advantage is that our geographical proximity to the City of London means that we can work very closely with the advisors in the city, whether they be lawyers, accountants, tax advisors. And certainly if you're looking at these emerging jurisdictions, that trusted advisor role is a key element when one is looking at structures for families. And I think there's a tremendous opportunity for Jersey and the City to be working very closely together with that as a focus.